Good morning, everybody. Welcome to today's edition, Daily Market Commentary. Hope everybody's having a great day. It's a wonderful, wonderful Wednesday, hump day, as they say. And hump day is the idea of a hump day is that we've gone up, 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 and now the rest of the week we just kind of come rolling down, right? We've reached the hump. Well, are we going to see that in the equities market? I think that's a valid consideration and something worth talking about today. As also we saw a really fairly quick move yesterday in the currency markets that we're going to have to address and take a look at. So, a couple of moves yesterday that were a little bit whipsaw-y, if you will, and we'll talk a lot about what those are and how that works. If you're new to the channel, make sure that you click the subscribe button, hit the notification bell. If you're a regular viewer, hit the thumbs up icon. It means a whole heck of a lot. The computers like to know that human beings are actually watching and paying attention. So let's go ahead and shrink my face and let's do our thing. All right. So starting here with the S&P. So yesterday somebody had said, "Do you think it'll be another inside day?" And I said, "Well, I'm not real sure, but we got to get outside of this range." Well, we did wind up getting outside of that lower range, certainly without the basing necessary for a breakout, which is why it didn't hold true. But there was no necessary basing to give us a true breakout position. It was really just a plug and go right above there. Matter of fact, if you look at that on a 15-minute chart, you can see that we spent a very small amount of time underneath that level. I mean, I don't go to fives, but I want to just see if the 5 looks very similar to that. Yeah, so we spent about 7 or 8, it looks like about 15 minutes we spent underneath that level. So no basing whatsoever, not even on a 5 to get us in on a short. However, I think that short is still valid. I really do. I believe that this is I mean, we've been looking at a picture of slowing momentum in the on the ES on the daily time period, and we've talked about this slowing momentum, so it's not a shocker. The other thing that we talked about is the fact that typically the markets go up in January, and then they pull back in February, right? We typically go up throughout the early part of January, and then typically get a pullback into February. And so, would I be shocked to see us really get a deeper pullback soon? Not really. Now, I don't think that it's going to happen quite yet. I think that as we continue to get a little bit of a rollover, I wouldn't rolling down to this area here might be kind of more realistic, 37.50, somewhere in that range. But I think for the smaller time period, we can find a trade idea if we get the basing. You're right, Liz. It didn't take me long to get to the 5-minute chart, but I just wanted to illustrate how short we spent, how not short, how little of an amount of time we spent underneath the level. But I hate going to the 5-minute. You know it. I know it. Everybody knows it. All right. So going down to the 15 and looking for a reversal trade, I got to tell you, man, this is whoo-wee sweet. This is good. This is sweet sauce up here. 37.98 by 3800, I think, is a really, really good place for a potential reversal. Dennis, let's take a look at that when we get there, because we did see that big movement, and that was all based on the dollar, right? I mean, that was all dollar movement that did that, because the currencies also reacted very strong. So 37.98, 3800, I think is a decent reversal point. Is it against our big picture uptrend? Kind of, sorta. I mean, it's because but we're seeing that momentum really, really start to slow off, and we've chopped very much sideways here on the 4 hour. So by chopping very sideways on the 4 hour and by our momentum really slowing down, I'm okay with this speculative short up here if we rally back up to that region. That's 20 points away, right? So I don't know that we're going to make it back up to that region. And if we make it up to that region, then the market's going to be up 7. And so will our momentum have shifted at that point? I think that it's a risk worth taking. Your stop obviously got to go above this green candle here. We may see a bit of a turn, so I'm not sure on this as of yet, Dennis. Looking at the NASDAQ, very similar picture, although the NASDAQ, you could say, well, I took the breakdown on the NASDAQ. And if you did, because you looked at this little basing in here, and you took this breakout here, or even this one here, 1, 2, 3, 4, 5, about 6 candles later, we basically had gone nowhere. So even if you took the breakdown on here, it didn't go anywhere on this one either. If you took it on the first little touch, okay. The real trade was the retest up to this area here, right? So this was the real trade, was the retest back into this area where you got about a 4-to-1 move away from that zone. And I think that was the level to look at. Now we've hit it again and started to come back down. So what am I looking at for today? So this is a bit of a weaker market than the others, which is not normal that we see a tech market so weak. But I mean, for the first time in a long time, I think we're seeing a little bit of a backlash against big tech, and I want to see if that backlash continues into the investors. I don't know that it is or will. I'm just public sentiment. I don't think that there's going to be enough long term to really impact it or affect it at all. But it is something that we should at the very least consider. And so I'm going to put this level a bit lower than our S&P level. At 12,890 by 12,898 as a potential for a reversal point. I made it a confirmation because we've already touched it once. So by already touching it once, it makes it a little bit less probable. Now in the S&P, we wrapped our lines around this level up here, whereas in the NASDAQ, we took it down here. And that's just due to the NASDAQ's relative weakness compared to the S&P. Now, interestingly enough, all this is going on. We're seeing all this weakness, and yesterday the Russell hits a new all-time high. So the Russell decided, hey, listen, I don't really want to play. I'm going to go do my thing. I may go do my thing and let everybody else do their thing, and I'm just going to go up. And that's what the Russell did yesterday. So the Russell, whereas the other market stayed inside the prior day's range, did get out above, and then last night in the Globex session created a new all-time high. And so whereas the Russell is not agreeing with the other market, so it makes me a little bit less comfortable to take a long that I would normally consider as a good trade. You do have, based on the Russell itself, this level here for a potential reversal from yesterday. Now this level was the one that broke us through that all-time high and wound up creating a higher high. So since it created a higher high, it's still a valid area of demand. On our 4-hour trend, we are still, continuing to move a bit higher, and I think that this could very well hold. So if you don't feel like the S&P and the Nasdaq are really, if they're losing steam on the downward move, then the Russell reversal in this area could become very valid. I'm taking it with a little bit of a grain of salt, and if we get to there at the open, I don't know that I want to take it. Right? I'm going to be very cautious around trading right at the open. Let's see. Apple reports in a couple of weeks, and they may blow out. Mac sales were up something like 33% last month. Possible. I don't know. I haven't looked into the fundamentals of Apple as of yet, but I know that we had seen. I'm not sure, and I frankly didn't look. I'm just going with assumption, but some of the big tech stocks have taken a little bit of a hit in the last few days. Right? Facebook was here. Twitter gapped down, tried to make an intraday recovery, and then yesterday had another down day. That's actually a bearish. Was that a bearish Harami setup inside of there? I wouldn't be surprised to see price come down a little bit further. Those were the two big names. I didn't look at Snap, which isn't part of this much. No, Snap actually has gone the other way. It's continued to kind of run back up. But that's really, but really what we look at is what are the big ones doing that drive the overall Nasdaq, and they're really not being affected in a tremendous amount. So with them not being overly affected a tremendous amount, aside from a couple of them, I think that's why we're seeing the weakness in the Nasdaq. But it's not enough weakness for us to really worry about yet. Facebook being the weakest of all of our, I look at Microsoft, Apple, Facebook, Google are the five that really matter. Oh, Apple's setting up for a really nice move higher. Ooh, Yeah, that's setting up for a really nice move higher. I like that setup a lot. Um, that's a pretty good setup. I will tell you, I gave up my iPhone, Dennis, when they hit my they hit my ceiling when it comes to price, and I decided I was not gonna spend the money that they want to for the phone, and I switched. So I haven't really kept up to date with what they're doing. So um, there we go, IV range. Yeah, our IV's starting to creep up a little bit. Could be a good opportunity though. I really like this bullish case, this bullish setup here on Apple. Um, Provided that we get above 133, I think that there's room to run. So yeah, Corey looks good on Trader Maryland. First of all, because he just looks better in person than I do. So there is also that. All right, so let's Alex, good to have you. Thanks for joining us. All right, so let me switch this over to the hourly chart here. So those are our levels for today. Any questions on our equity markets? Um, any questions on our equity markets as we're looking forward? I'm going to share this grid then. So everybody that's got the trade feed, you can go get the grid from the trade feed. Oh, and of course I didn't pull that chart up yet. Hold, please. I gotta. Sorry about this. I got to work on another screen for just a moment as I forgot to put the trade feed page out there. So I need to rebuild it. All right. So let me share this grid again. I'll put it back into my clipboard, and now I can paste it. Okay. Moving on. So next, let's go to energies and metals. So looking at our energies and metals market, um, machine learning capabilities. Nathaniel, I got to tell you, man, you're one man I would never argue with about computing power. You're used to being the smartest man in a room. I know that. I don't know anything about them though. I will tell you, I've gone away from the Apple side of things. I moved back to the dark side that is PCs and Google Pixel phones. All right. So on the CL, we are continuing our rally higher. So where does crude oil stop? Right? Where does it stop going? I think that we've got some supply up here on the daily chart. We talked about this yesterday. That we are coming into daily supply. Do I think that we're going to turn around at this daily supply? No, I don't actually. I think it's going to go through that. I think that we are. I think we'll see I think we're going to see an increase in oil overall. This is ever since this low back in October, oil's pretty much been straight up. We saw a little stall in December in a sideways price pattern all through here, but then it's just been up ever since. Our area of demand down here is still fairly clear. But this is really nice bullish price action. This is really clean bullish price action on a pullback and a move higher. You know, um, if you just take fibs, those of you that use fibs, and I'm not a humongous fib person, but I do believe that there's some fib confluence to consider. And so if I take our most recent trend from the low of the week to now to the high of the week, and I add my fibs back in there, you'll see that we're sitting right at a 23.8 retracement. Now, if I take those same fibs and I go to the low of the last pullback to, oh, come on, you son of a gun. Activate drawing, grab the point, there we go. To here, then you'll see that our next 23.8 retracement is actually down at this area of demand. So I can now, which one works? This has always been my biggest problem with Fibonacci retracements is it's very subjective on where you place the line, right? However, if enough people are using a lot of the same areas, then it becomes a lot more valid. So what I'm going to do, this is a decent area of demand anyway. So I'm going to wrap my lines around this area here. However, based upon the high of or the low of this week's trend, which was here, and the fact that we're sitting at the 23.8, what that tells me is if I go to a 15-minute chart and I look at a reactionary move off of this area in here, then we can get a move higher. Our stop would have to be below this pivot right here. And essentially now what you're playing is essentially the bull pullback long, right? You're trading the long on a bull pullback based upon this price shape of move up and a rest, right? That's essentially what you're playing here is this move up and a rest, and then for price to continue to move further. All right. True, and a crude oil report could have some big move to it, but ultimately that's where I think our a potential reversal point is. Now we are basing a bit in front of this level, which makes this a bit of a weaker zone based on the fact that we're basing in front of this level. And so with that being said, this has to be confirmation. Because while I like the placement, I like the structure, what I don't like is this kiss of death we're getting up in here, right? So if we come down into here, it's a bit more weakness. I do want to look at this on a 4-hour from a candle-to-candle perspective. So from a candle-to-candle perspective, this actually could work out to be a pretty good little setup as well. All right, next, gold. So looking here at solid gold, we did have the break above this region. We talked about this the other day. And now we're sitting below where I think the better breakout is above this 1864. If we were to get that, we said yesterday that if we get the basing and we pop above here, you've got a really nice target level up in here at this 1885. Now, why that 1885? I should probably have had that on a 15-minute chart. It's a little bit cleaner to see. You can see those wicks that are in there. So you've got room to run above this region in here. What about in between? Well, in between, in betwixt, as you might say, I've got a couple of supply areas and demand areas on the smaller time frame. I'm just not really comfortable using them while we're in this sideways range. Now, our 4-hour overall, our overall 4-hour trend still to the downside, right? Still not a lot of overall upward pressure, and this looks just the opposite shape of the of crude oil, where we're seeing the move down and then the pullback. And I'll give you I'll give you a small guess what that retracement looks like if I were to pull a fib. Now, why do I care about fibs? Once again, if enough traders are using them, they become a bit of a self-fulfilling prophecy. And so it looks like we're sitting right at about a 38.2 retracement on these fib lines. Actually, it's in between the 38.2 retracement. So I thought it would have gone all the way back up to the 38.2. It didn't quite make it there on this most recent strong trend. And so that could be why we're getting a little bit of a stall. There's not enough, I'll call it groupthink, jumping in. Remember, that's why I look at fibs. I look at fibs to tell me what is the groupthink. I never, and the rock means ever, let the fib make the decision. All right. Nat gas, not a lot to talk about today. Same thing with copper. I don't really have anything to talk about on either one of those markets. So let me share this grid in here. And then real quick announcement, by the way, regarding Friday's daily market commentary. We will not have a live daily market commentary on Friday. So I repeat, there will not be a live daily market commentary on Friday. I will try to do a recorded version, but not a live one. I'm going to be in Atlanta teaching our strategic trader class. And so our strategic trader class is going to start at 9 Eastern. And I'm not sure about the internet. And the last time I tried to do a live DMC on poor internet, well, it just was a hot piece of garbage. So I'll probably do a recorded one, and I'll still post all of the charts, but I don't think we're going to be doing it live on Friday morning. So just keep that in mind. Looking at commodities. Commodities yesterday, Liz, you told us about the inventory report coming out, and wow, did it give us a move, right? We got a really strong move. Soy, Kapawi straight up. Corn, Kapawi straight up to the point where we had a limit move. And it just said, okay, well, we're just going to stop for a little while. We're going to stop and take a breather. So yeah, it's just not worth risking it, Dennis. And so I'm gonna take the day and not deliver the DMC that day. But I will still record it and upload it. So that's the plan. Now, I will tell you, here's what's funny is how much money can I make on this move? Well, if you follow your rules, none. This is not the kind of trade that we want to take because if you got long on the announcement, great, you made good money. What if you got short on the announcement because you thought it was going to go down? Well, then you got your clock cleaned and probably and probably lost more than you wanted to because of the limit move here. So, oh, Paul, it's going to be great, man. I'm glad you're going to be in the class. It'll be fun. I'm just excited to actually speak in front of human beings, socially distanced, in our masks, far away from each other. Everyone will get their temperature. Don't worry, we're all good. We're not no super spreaders up in here. Um, but I'm just looking forward to teaching to human beings again. As much as I love everybody in cyberspace, I do miss human beings. Um, So our corn market's continuing to rally higher. If I just go back and look at this on a much bigger time period, like we're going back on a 20-year weekly chart, we've come into the point where we had this, call it free fall right through here, and this is once we got above this pivot, which is just what we came above, we've now entered into the area where there's clean air for price to continue to run higher. And so, John, who phased out human beings. Oh, John, once the world opens back up, I need to find, hopefully you or somebody out there knows, I need to find some sort of a business reason, a speaking gig out in the UK. I need to find a business reason to come, mostly because, well, I need to bring my wife. If she doesn't get to go back, she's going to be very upset with me. And so, if you run into anybody who needs me, let me know. That, and I promised my wife I would take her to the UK as well as Scotland for our 20th wedding anniversary, and it'd be a really good business reason to do so. When you can, write off your wedding anniversary trip, boom, 2 in 1. Anyway, um, legally, I still would need a business reason to do it. So this is our clean air where I think we can see price continue to move from here, and jump up in there. Well, I can't come yet, John. I won't be allowed to leave my room. So I mean, we don't have anything really stopping us until this 639. Now, does it mean that I think that we're gonna rocket straight up, right, straight to the moon? No. But when I look at the amount of sales, selling pressure above me, there's just none. And look at I mean, this is it, just parabolic move straight up. Um, Yeah, Scotland, good Scott. I want to play golf while I'm out there. It's on the bucket list to play golf out in that area. So that's on the bucket list is to play golf in Scotland. All right. So I mean, obviously we anticipate that speed candles do typically tend to get retraced, and so when I look at this as just a pure speed candle, we would look here. Now I will tell you that in my experience, sometimes those speed candles, which we expect to get retraced, they take a long time to get retraced. If matter of fact, if I go back, I don't think I'm going to be able to go back far enough to see it. So I'm going to come back to here. I've got to use a daily chart in order to do it. But when I look at corn and I go back on a daily chart, I actually remember this exact trading day because I was with a friend of mine who's one of our members, Mr. Doug. He and I were trading one day in Austin, and there was this limit down day right here, Kapowie. And we waited and waited and waited for this area to get retraced, saying, okay, well, speed candles tend to get retraced. And this was a limit down day in corn, and it never did get retraced until October of this year. And now we did get a little move off of it, as you can see on the daily chart. We actually wound up getting a little move off of it because it was the origin of a very strong drop in price. However, it doesn't always get retraced. But Oftentimes, though, it will not fully get retraced. It gets a 50% retracement. Notice here, we got about a 50% retracement and then fell through. So what I'm going to do is on this speed candle here, while I'm still going to pay attention to the retracement itself, I'm going to just kind of draw a line here about halfway through. And let me go back. And I want to see where if I line this up, does this line up to the prior high? So here was the prior high. I want to see if this prior area of resistance, 523, lines up as a good retracement on the 1 hour. So if we were to just look at a potential retracement point for this speed move higher, this would be the prior area's high. However, at that prior area's high was also where we opened up when the Globex session opened. I'm going to put a potential zone at the limit mark. Markets tend to trade back to these limit areas, and I want to see if we get a potential reversal at that zone. So I've got this line here just as something to consider. If we get a reversal candle here, you could go candle to candle, but I'm also going to look at this area in here. Yeah, and that's something to consider is Dennis, I would wonder if he was trading around an announcement like this that would cause that kind of movement. So, all right, I spent a lot of time on that discussion, but I wanted to make sure that everybody understood kind of where we were going with that. I will say bean oil yesterday, we looked at this area of supply. You got caught on the announcement here, so certainly you shouldn't have been getting in the trade at the announcement. Although if you did get in, it was a very, 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 and the rock means very quick stop out. I mean, the first candle itself was a quick stop out, and it just didn't hold at all. But I think that was a worthwhile move because our overall trend is beginning to look down. I think it's still looking down on the overall trend. I'm not sure why this one is diverging from the other commodities so much. I don't understand enough about the fundamentals because, frankly, this is not my normal wheelhouse. But it is diverging from the other commodities. All right. Now let's go to bonds here real quick as I'm running behind. I'm like the Steelers in the first quarter on Sunday. Behind early. Well, I was scared of them until I started actually looking at them every day. I think the cure for any fear is knowledge, and as I started to look at them more frequently, especially corn, I've gotten a lot more comfortable with them. I still don't understand all the fundamentals inside of them because I haven't taken the time to learn them, but I know that they have a lot of validity in their movement. So, Dennis, you asked about the daily candle on the hammer candle on a daily chart on the ZN. So I guess the question is it time to add the ZN back to your portfolio after this strong move down? Yeah, this is a great reversal candlestick. Absolutely no doubt about it on a daily chart. If you want to go candle to candle on a long, you've actually already got permission for the entry because you got above the high. So candlestick reversal patterns are very powerful things. However, where would your target be on here if you wanted to take this long as a swing trader? Well, in my mind, my target would be right here at this area of supply, which is oddly enough right at a wick over wick area. Now, this area of supply was found on an hourly chart, but it's a wick over wick area on the daily chart, which is an old area of support. Old support acts as new resistance. So if you want to take this as a swing trade and you want to get long coming off of the reversal candle, Dennis, then I would say that you've got a reason to do so, but your stop has to be below here, your entry right here, and your target up here. So you've got less than a 1-to-1 reward to risk in my thought. So, Gabe, I haven't even thought of. I mean, I don't mean that in a negative way, but like I totally forgot about Gabe. Gabe was a heck of a teacher. I haven't talked to Gabe in a really long time. All right, TLT really shows the hammer. Yeah, TLT definitely does give you the picture of the hammer. But once again, a move back up into this range, and that would be kind of where you would look for that. So, going to take a look at our. Oh, we're going to. By the way, speaking of TLT, tonight at 7 o'clock is our Wealth Essentials class. So those of you that are Traders Army members, don't forget tonight is Wealth Essentials. We're going to be taking a look at the model portfolio, rolling some of our January positions into our February positions, and looking to see what that looks like moving forward. So keep that in mind. Tonight, 7 o'clock, Wealth Essentials. ZB, so our 30-year note. So we did look at this 15-minute level here. What did we get here just before the 15-minute level? Drum roll, please. Brrr, kiss of death. And so the kiss of death told us you should probably not get in this trade, and then the trade just blew right through. So this is a great example of why we utilize our rules, and we just don't do set it and forget it trades. A lot of people love set it and forget it trades. Stop it. Set it and forget it trades are not the way to go. You have to follow the rules and utilize alerts to tell you if a level is still valid. And the number one reason a level will lose its validity is the basing before the level, which will take it out of my tradable landscape. And that's a picture perfect example of why you'd want to look at something like that, because it was a 15-minute level and then we had basing on the 15-minute time period. Tells you probably shouldn't take that trade. Euro. Is there a connection between the Z and the ES or the NQ? At the moment, not really. Usually there is, but right now there's not. There's not a huge correlation. Our bonds, commodities, bonds, gold, and currencies are all being correlated together right now, but the S&P is kind of removed from that. Now, why do you think that is? I think the reason for that is because the stock market has become disjointed from the fundamentals that move it. Okay? Disjointed from the fundamentals that move it. That's all. Love to hear you and Justin debate limit. That's actually a really good idea. Maybe we can do that for the next Trader Summit. Speaking of the next Trader Summit, I am looking for potential speakers at the next Trader Summit. So I like to, those of you guys that know our Trader Summit, we do them once a quarter. They're completely educational. We do about 8 hours worth of talking, and I bring in guest speakers. So if you guys know of anybody you'd want to hear from on the Trader Summit, let me know, especially if you can help me reach them, contact them. Because a lot of guys that I've reached out to that are in the industry, they haven't responded to me because they think I'm trying to sell them something, and that is not the case at all. But they don't always respond to me because they think I'm trying to pitch them something. So if any of you know somebody who you think would like to speak, send me an email. My email address, I'll type it in the chat window. chuck.fulkerson@tradersarmy.com. I'd like to do that probably in March, February, March, so I need to start planning for my next speakers. So if you know anybody you'd like to hear speak, please send me the info. Or maybe you're watching this and you want to be a speaker. Let me know. All right. So the euro. So looking at our euro level, this, by the way, was the trade of the day yesterday. This came into our level and kapow, we moved away. However, the downside is we got basing here before the level. So this is the time when that basing before the level told me to stay out, and the trade wound up working out. So this is one of the times when the basing before the level rule kept me out of a good trade. Now I will tell you, here's why I didn't take it overnight, was because we were basing here in front of the level and I went to bed. I turned my computer off. I turned my computer off last night and said, we're basing. I'm not as interested in it. So if you missed this trade, don't feel bad, because you missed it utilizing the right amount of rules. We did wind up rallying up throughout the day, all day yesterday. I still think there's a breakdown trade in here. But we could also reverse back. Let's see if there's anything in this 15-minute level. I'm going to look here as our reversal trade. Now, why here? I originally, when I was looking at the hourly chart, my brain went to this area. But when I look at that on a 15-minute, when I look at that on a 15-minute, very unclean. It's just we dropped, we rallied up, we dropped again, we rallied up, we rallied up, we dropped. That's way too much retouch. It's an incestuous retouch of the entire level. And so I don't even know if that's the right use of that term, but I'm using it anyway. I'm a rebel. I don't care. This level, though, I think is really clean, because this means that we dropped all the way down to here, rallied up to here, and then dropped again. So this is really a pivot, right? This is kind of what I determined to be a hidden pivot. That's what I would call that. I'd call that area a hidden pivot, because it doesn't look like a pivot at all, right? It just looks like a little pause in price movement. But when price comes all the way down here and then rallies up, what we're seeing essentially is, if you think about the length of this move, right? If you think about the length of this move from here to here, it's about the same as this move here, right? And this pivot is clear to see. It's just happened all in one candlestick, right? So this is a nice hidden pivot reversal level formed at a good time of the day. So that's a very clean level. Canadian dollar also hit our supply level. Didn't quite get the same amount of basing, but also, reversed off of the zone. It's actually rallying back up to that level. So if you grab that little short, you got a little move out of it. Didn't have the basing in front of the level, wound up working for a little bit of a 2-to-1. But now it's just kind of stalling sideways, and there's really nothing I'm going to want to add to my charts. I don't love it one way or the other. I do like our little hidden pivot level in here on the euro, but there's nothing I like as clear on the Canadian. And I am running out of time this morning. I apologize for running over today, but hopefully you guys are all right and have a few minutes to spare. All right, and then last but certainly least, New Zealand dollar, Great British pound. I will say yesterday, New Zealand dollar, Japanese yen, and the Aussie, all of them gave us a rally that was somewhat frustrating. I will say that. Let me save this grid. I keep forgetting to save this grid with a 60-minute, because it always shows up as a 15-minute on my New Zealand dollar. All right, here we go. So this one rallied right through the level that I anticipated to actually be a pretty strong potential for a reversal. Unfortunately, it didn't even. I mean, it didn't even stop to breathe. It just cut right through there like the proverbial knife through butter. And so now on my 4-hour, this is still a downtrend, right? I got lower swing lows, lower swing highs, but we sliced right through the 15-minute level, which makes me a little bit more gun shy on the next move higher. So while there is another supply level and in my same hidden pivot area, right? That's that same area that looks to be a bit of a hidden pivot. I'm still going to be just a little bit more gun shy on this one, and I'm going to be very mindful of basing before the level. So create an alert, and that alert is going to go right here. All right, Great British Pound. Moving higher, we've got a potential breakout long up above here, 1371. If price gives me a bit more basing, if I look at this on the 4-hour chart, this is pretty clean to see. It's really right now only giving me 2 touches though. So I only really have 2 clean touches. And so on a pullback, if we get a pullback trade down to here, that would be where the reversal would come into play. And then the Japanese yen, I mean, that one, we definitely got a break above the triangle, and it just ran right through the supply area that we had looked at. Now, that supply area does appear that it might be looking to be a bit of a flip at this point, but that flip may or may not hold, and I'm not willing to go long on that flip. So with that going, not willing to go long on that flip, and then the supply area that's up above me being this long upper wick. Well, that long upper wick's kind of a retest of this pivot, and so I don't want to play where I can't see where I'm stepping. Right? It's kind of like to me, when I look at something like this, it's like stepping into a murky lake. You don't know what's in the water, and so it makes you think twice about just putting your foot down. And so I'm not overly comfortable jumping into there. If I go to a 15-minute chart, when I look at it, we've got that same picture of, I'll call it that hidden pivot again. But this one, I don't like it quite as much. No, you know what? I'm actually not as sour on it when I look at it here. I don't like the fact that it's as close to the pivot up here. That's really the reason for my hesitation. So when I have to hesitate this much, I'm fighting to find a level, and it's probably not a good trade opportunity. Little better area of demand below us, because that area there acted as a resistance point. Old resistance oftentimes acts as new support. That would kind of be the best go of it at the moment. And then the Aussie looks a lot like the New Zealand dollar. Aussie and the New Zealand dollar oftentimes run, birds of a feather tend to flock together. Although I hope that's not an insult to anybody. Um, Lower swing lows, lower swing highs on the 4 hour chart. Yeah, I would agree with that. I'm not a huge fan. I'm not a huge fan of most of the currencies, Liz. Aside from of all the currencies today, the one that I'm most interested in is this hidden pivot level on the euro. I think that's the one that is the cleanest, best currency level today. And so there's nothing in here that I'm jumping up and down about saying, "Oh, I got to trade this. This is my level. Woo, my jam." Um, what I want to see is what happens when we break, if we break to the downside on those equity markets today. That's really what I'm most interested in seeing at this point. So, all right. So those are the levels that I have for today. I appreciate you guys. I appreciate you guys coming and joining me today. This is my one of my main goals that I want to be able to do is to every day provide you with some value and make it worth your time to come and join this and watch this video. If you're watching this live, thank you for coming live every day, 7 o'clock. We try to do it at the same time every day. If you're watching this on the recording and this is your first time with us, please feel free to join us live. I'd love to have the more people we have here live, the better, because it's nice to have people in the chat window that I can communicate with. I'm much better to speak to live human beings. But next, remember, on Friday, it will be recorded. Friday will not be a live DMC. Tomorrow is our live trade room. Tonight is our wealth essential session. So a lot of stuff happening at Traders Army. Looking forward to seeing you all later. I appreciate you guys so much. You don't know how much I value actually having a nice platform to be able to talk about what I love to talk about each and every day. And until tomorrow, everybody, peace out. Much love. Talk to you soon. See ya.